The number one most important part when it comes to technical analysis is understanding how to properly read a candlestick chart. Understanding candlestick charts and what to kind of throw out there and what to actually implement is very important. I've watched so many different candlestick videos when it comes to trading on YouTube, on Instagram, on different social media platforms. Some are okay, some are, in my opinion, not that great. And in today's video, I'm going to cut out the BS and I'm going to include the top candlestick pattern trading that you need in order to be a profitable trader. Now, these are candlestick patterns I personally use, and I'm also going to reveal how to use them in the proper context. Without the proper context, any trading pattern doesn't mean much. So guys, let's go ahead and let's get into the video lesson. Alright guys, so let's go ahead and let's talk about the full guide to candlestick trading. Now, I personally have seen so many different types of videos when it comes to candlesticks, and to be honest, some of them are good, some of them are okay, but in my opinion, I'm going to go ahead and reveal the top candlestick patterns that you should have in your repertoire and how to properly use them. The problem is, when it comes to trading, so many people want to see a pattern and they just want to trade it based on that pattern without any context. But in today's video, we're going to go ahead and we're going to talk about it. And we're going to also talk about the best candlestick formations. So let's go ahead and let's start talking about it. So understanding the importance of candlesticks. Candlesticks are essentially the language of the chart. And again, I want to preface this because this is very, very important. Patterns without context is pointless. Context is always number one, but using candlestick patterns with context is going to be helpful to kind of determine how we can enter trades, how to get a bias from it, and all that. All right, so now let's talk about it when it comes to bullish candles and bearish candles. Now, this is very elementary, but just in case there's any beginners, I want to go ahead and just dive down in it completely. Essentially, when you have a bullish candle, you have a candle that opens up at a specific price. This right here is the opening price. Then you'll see this kind of wick right here, and this will indicate the low of that specific candle. Candle may go all the way up here, and by the time the candle closes, we left this top wick, and this is the high of the candle, and this would be the close. So a bullish candle, very simply, it's going to be any candle that closes above the opening price. Very, very simple, very simplistic in nature. So a bearish candle is inverse, so I'm not going to get over it, but any candle that opens and then it closes beneath that opening price. Now, there's so much that we can utilize with this, especially when we start to get into daily bias, when we start to get into daily candles, weekly candles. This is very, very important. So if you're someone who's a beginner, make sure to understand the very basic nature of candlesticks. So let's go ahead, let's get into kind of the first overall candlestick pattern and the overall basics. And for me, that's understanding Williams fractal and what constitutes a swing low or swing high. This is very important because ultimately you're going to be able to determine swing points in the marketplace, which is going to help you with structure. It's going to help you with understanding liquidity pools, which impulse legs are important. All of that stems from the very basics with this. So a Williams fractal is essentially just a 3-bar pattern where you have a candle that has a high, a candle that has a higher high, and then the candle to the right of it is a candle that's lower. This would constitute a swing high. And inversely, a swing low is essentially you have this candle with the low, then this middle candle makes a lower low, and then the candle to the right of it is going to be a higher low. Now let's go ahead and let's show an example of this. So the swing high, very basic in nature, but you'd be surprised how many people kind of gloss over this, especially within the SMC community. So I wanted to go ahead and clear all this up and then kind of bring the foundation to most people. This 3-bar pattern is what constitutes a swing high. Understanding swing points, again, is critical for understanding pivotal swing points in the marketplace. This is going to, again, help us identifying liquidity pools. It's going to identify, keys of structure and all that. So again, we just have this very basic pattern where you have this candle high right here. You have then the following candle making a higher high. Then the candle to the right of it is making a lower high to the candle to the left of it. Now, the swing low is the same thing, but in the inverse. And again, we should have a candle right here. Then this middle candle is going to make a lower low. And then ultimately the candle to the right of it is going to make a higher low. And this is going to constitute a swing low. Now, stay tuned to the structure series. I have a full market structure course from top to finish, a full guide that we'll be uploading on this channel. So make sure to subscribe because this is going to be very in-depth on how we can utilize this to identify key impulse moves inside of the marketplace. So let's go ahead and use an example right here. Again, if you're kind of overall new to these concepts of smart money, this right here is an imbalance. We're going to talk about it later on. But nonetheless, the important part that I want to illustrate is seeing a swing low. Notice that 3-bar pattern occurs at a resistance point. So again, this is going to be at an area, a reference point, an area where the market may go ahead and turn. Now, why is this kind of important to understand? If you understand key swing points, and let's just say you get this formation, what do you expect the next candle to be? The reality is this: if this is a daily time frame, if this is a weekly time frame, when you have a swing high that kind of forms, you can anticipate the next candle at the very least to open. The candle might have a top wick, and then the candle might close bearish, or at the very least, we're going to have some sort of downward move. This is again important because when you have a daily bias, this specific day you can potentially anticipate a bearish day. Let's go ahead and let's see what happens. And again, overall comes, we form our swing high, and we ultimately have a next candle that's bearish, and we ultimately fade lower in this example. Now, inversely, we have a swing low again at imbalance point right here. Again, we have a candle right here, the candle to the middle, which makes a new low, and then this candle right here that makes a higher low. Ideally, this candle does make a new high, so that's something I didn't want to know. That's why I included this candle as well, because you kind of want to see the middle candle ultimately create a new high. And then that kind of creates the order block concept, which again, I'm going to have a full smart money concepts guide, which is going to be separate of this video. Nonetheless, you have a swing that forms, and we start to see that the market is ultimately going to be bullish and have a momentum shift to the upside. And again, this is when the price pattern kind of forms. When you have a swing low, you can again anticipate potentially more upside candles, whatever time frame you're on. Now, again, the reason why I think this is super important and it's very underrated, I think most people don't understand that if you can identify this on a weekly time frame or a daily time frame, you can ultimately have a very clear bias, and it's very simple. All you would do is anticipate the next candle to be bearish, and in this example, you would expect the next candle to be bullish. And again, that's a lot of edge that can be created from that, because again, we have a high probability of the marketplace potentially continuing, especially if it's at a key reference point, and if that reference point is already in line with an overall trend. Now, let's go ahead and let's talk about dojis. So when it comes to understanding dojis, I already know a lot of smart money people, they think it's kind of all pointless. Candlestick trading is nonsense. However, I think it's important to note that the true reason why dojis are important is because of this. The true point of understanding dojis is using it to identify a potentially choppy market and when to avoid trading. That for me is kind of how I personally use it. If I see a doji, like multiple doji candles and prices waking back and forth, I'm going to go ahead and I'm going to probably tell myself this is low probability. Let me just get out. Let me just not even bother trading in this environment. So let's go over the definition. Again, a doji is going to be when the opening and the closing price of the candle is nearly identical, as in this example. Price kind of wicks up, wicks down, and then we close near the opening price. So can you imagine if that candle again was a daily or weekly candle print? This will typically indicate that price action may be choppy, especially if we are getting multiple doji candles. Now, you can go ahead and we're going to reference this example on Euro USD on the 1 hour time frame, which occurred on Thursday, March 9th, 2023 during the London session. All right, guys, so here's the example that I want to kind of illustrate to you of how I personally use it. If I see a specific session, and again, this is the hourly time frame, when I start to see things like this, even though the candles are kind of making higher highs, nonetheless, I want to avoid this type of price action, especially when you see a bunch of wicks, when you see a bunch of doji candles right back to each other. You see another one like right here, and look how the market is ultimately being choppy when we have multiple doji candles. Again, if this is the 1 hour time frame, daily or 4 hour, that can give us an indication of when we actually should not be trading. Everyone always talks about like, oh yeah, like when you should be trading, high probability and all this stuff, but like very little people will tell you when you should not be trading and when environments aren't necessarily the most ideal. Now, let's talk about engulfing candles and how to properly use them. So here's an example of a bearish engulfing. So let's go ahead and actually let's put a definition to it. So when one candle overtakes the prior candle and takes out its prior high. This part is very key, and I give credit to Tom Dante. I got this actually from him, how he kind of how he kind of talks about when it comes to engulfing candles. For him, he prefers engulfing candles that take out the prior swing high. And this is something that I personally use in my trading as well. And for anyone who's trading like SMC concepts, you can understand what this already is. This is going to be essentially an area of supply or FU candle, whatever it is. You're going to have a pretty much a very good level here to potentially sell if price ever comes back up into this area. So again, a bearish engulfing, for me, it constitutes overtaking the prior bar. So this candle right here essentially takes out the high and then closes beneath that candle's low, and we have a bearish engulfing in this scenario. So in this example, here's another one where the price ultimately takes out the high and then we close beneath that prior candle and we overtake that full candle. And then you see this kind of typically, with context, will indicate bearish shift and momentum to the downside. Now let's go ahead and let's talk about bullish engulfings. So obviously it's the same thing but in the inverse. So when we have one candle that overtakes the prior candle and takes out its prior low. So again, we have this candle right here. Price takes out that low and we ultimately close above. And this candle encapsulates this candle right here. This would be considered a bullish engulfing. And again, just that little minor detail will make a difference in the candles and the levels you choose to trade. So here's an example. Again, price takes out that prior low. We shift to the upside. It encapsulates this whole candle. And this is ultimately a bullish shift and it indicates some potential strength. Again, assuming this is occurring at a very key pivotal level. Now, let's kind of wrap things up and let's have a key takeaways. So again, guys, I want to preface this as much as possible because so many people, and I was the same way when I was a beginner, even intermediate, sometimes you get caught into pattern recognition. Patterns alone are not going to make you profitable. That's just the reality of it. Now, everything needs context to work well. I'm going to have so many different video series here. You can check out the daily buys videos. If you can use the daily buys videos with smart money concepts and using key pivotal levels, using key structural points and key reference points, using these patterns will help pay dividends because, again, you can look for those patterns at very key levels that will indicate, hey, this is just more of a confirmation to my bias or to my trend. Now, here's a question that I want to leave you guys with to always ask yourself. Where and when are these price patterns occurring? Are you seeing a bearish engulfing at a potential resistance? Are you seeing a bullish engulfing at a potential support? Which sessions are these patterns occurring, right? Which time frames are they occurring? If you ask yourself these questions, you'll actually mitigate a lot of the nonsense trades where, they're not the highest probability. Where if you get a bearish engulfing, but the bearish engulfing is in the middle of a clear bullish trend, you may want to kind of avoid that specific pattern. But yeah, guys, that's pretty much it for Candlestick Trading Guide. I do have a part 2 of this series coming out, so make sure to stay subscribed to the channel. I also do have a market structure full guide video from top to bottom, how to do top-down analysis that's coming out, as well as a full guide to smart money concepts. So until next time, I'll see you guys in the next video.